Hello everyone, welcome to yet another session of Currency and Commodity Buzz. This is Manav Modi, your bullion analyst. Let's look how the commodity market has performed in the month of April and our outlook for the next month. So talking about precious metals, we've seen gold and silver both has seen a seesaw kind of a move, where gold moved in about $100 range, where silver moved more than a $2 range. So we started the month by US CPI numbers, where it was reported by 5%, lower from the previous number of 6%. The pause kind of a interest rate hike was set in. Fed officials also supported the sentiment. However, as we progressed in the month, Fed officials changed their tone. We saw that more rate hikes kind of a probability was set in. Currently, 25 basis rate hike for the month of May is what the market is discounting for. If we see volatility in dollar index and US yields is also one of the reason for triggering the overall volatility in gold and silver. This month we see Fed, BOE, BOJ are the major central banks in focus, and economic numbers will also be important to watch out for. Moving on to the energy complex, we've seen that crude oil is now stuck between the narrative of OPEC plus and the rate hike expectations. So if we see OPEC plus narrative, the surprise cut announced by the cartel is fading off from the market. Our market is really skeptical that how much of a cut will be announced by the cartel in the next coming months. If we see the demand side story, China's demand numbers are really very supportive for the prices. The country is shipping in the most amount of oil since the past 3 years. So there is right now uncertainty regarding the US summer driving season. But if I talk about the overall demand story, there are expectations that US could refill its SPR reserves, which could support the prices from the lower end. Market participants now are sitting on the sidelines waiting for some direction. We maintain a buy on dips kind of a strategy. Support remains at around 5500, whereas target is at 7200. Talking about base metals, we've seen after a positive momentum for the last couple of months, metals witnessed some profit booking across the overall complex. Volatility in dollar index, sluggish demand from China, and mixed economic numbers were a few factors triggering this volatility. So moving on to copper, we've seen after a positive start, we ended about a 5% lower. Significant shortage in copper supply is being witnessed, while physical inventory slid to about a 14-year lows. Inventory in SHFE, that is Shanghai, started at the start of this year was at about 69,000 tons, whereas currently we are at about 146,000 tons. LME, however, witnessed a marginal recovery. Power issues is still there in the Yunnan province in China. However, Peru and Chile are witnessing some ease off in the overall supply constraints. If we talk about the US Fed official remarks regarding the rate hikes, they are triggering some volatility. Rate hike expectations are putting some pressure on the overall metal complex. However, pause kind of a sentiment is providing some support on the lower end. Zinc was under pressure. We've seen that prices on the LME sliding below the $2,700 mark. Contango currently for the cash to 3 month is moving around $12.5, deepest since November 2021, indicating availability of the supply. LME inventories for zinc have also jumped by about 20% in the past few sessions. Overall, slide in metals is a factor of demand supply push, whereas supply is improving and demand continues to remain subdued. Thank you all. For more such updates, subscribe to Motilal Oswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.